Welcome back, everyone, to today's Explainer. All right, today we are diving headfirst into a universally dreaded topic, but we're going to look way past the basic mechanics of personal finance. We are literally demystifying the exact logic behind income tax. By the end of this, I promise, we're going to transform that whole tax season confusion into absolute mastery. Let's get into it. It all really starts with this universal, everyday frustration. You sit down, you negotiate this fantastic, specific salary, but then the actual number that hits your bank account every month, yeah, it tells a very, very different story. And honestly, you are completely justified in looking at that payslip and asking, wait, where did the rest of it go? Who took it? And, was that even legal? Well, spoiler alert. Yes, it's completely legal, and we are going to unpack exactly why and how that deduction happens right now. Okay, let's dive into this. Here is our clear roadmap. We're going to cover the everyday money mystery, define what income tax actually is, look at how slabs work in reality, run through a real mathematical example, and finally end by busting some common tax myths. Section 1. The everyday money mystery. So for a lot of us, paying taxes just feels like our hard-earned cash is vanishing into thin air, right? But it's really not a missing fee. It's fundamentally a massive shared capital pool. You're actually funding the macro societal infrastructure, things like roads, public hospitals, government schools, defense, welfare programs. It's the stuff everyone uses and the economy absolutely needs to function, but let's be real, nobody wants to personally build or pay for all by themselves. Moving on to Section 2. What is income tax? At its absolute core, income tax is simply a fixed percentage of the money you earn that you pay to the government each year. And earn is the operative word here. It applies to almost everyone above a certain threshold, whether you're salaried, grinding as a freelancer, or generating returns from your investments. Now, there is a super crucial distinction to make here. Income tax is strictly based on what comes in, your money earned. This is fundamentally different from a sales tax, or GST, which is entirely based on what goes out, the money you spend on your everyday purchases. It's all about that incoming cash flow. Section 3. How slabs actually work. Now, what's really interesting about this slide is it gets into the progressive tax system, which is honestly where almost everyone gets completely confused. Think of it exactly like walking up a staircase. Step 1. Your basic exemption limit. Here, your baseline income sits at zero tax. Step 2, the next chunk of money you make gets taxed at a low rate, maybe 5 or 10%. Step 3 steps up to a medium rate. And finally, Step 4 hits the top rate. But here is the absolute game-changer insight. Moving up a bracket only taxes your extra income at that higher rate. It does not retroactively tax the whole shebang. Section 4, a real tax example. Okay, let's make this totally concrete. We're going to do the math together, and I promise absolutely no reason to panic here. Let's meet Priya. She makes a total annual income of 8 lakh rupees, so roughly 67,000 a month. I want you to keep that anchor number of 8 lakhs right in the front of your mind. And this brilliantly illustrates exactly how the progressive system applies to her. Let's walk through Priya's calculations line by line. On her first 300,000 rupees, the rate is nil, zero tax. Awesome. On the next chunk, from 300,001 to 600,000, she pays 5%, so that's 15,000 rupees. Then, on the final chunk, from 600,001 up to her total of 800,000, she hits the 10% rate. That costs her 20,000. Add it all up, and her total tax is 35,000 rupees. Now, to put that into perspective, look at this number, 4.4%. That is Priya's effective tax rate. Even though she technically stepped into that intimidating 10% top bracket for her highest earnings, what she actually pays overall on her total income is less than half that. The mathematical reality is far, far less scary than the bracket suggests. All right, Section 5, busting common tax myths. Let's ramp this up and solidify your new mastery with some rapid-fire myth-busting. Myth number 1, earning more means I'll actually take home less. No way. Totally false. Because of that progressive staircase we just walked up, getting a raise always, and I mean always, puts more absolute money in your pocket. Only the new money is taxed higher. Moving on, myth number 2. If I just don't file a return, no one will even notice. Look, guys, in today's digitized world, banks and employers are constantly sharing data with the government. They already know, And the harsh truth is, the financial penalties for evasion are going to cost you far, far more than the actual tax itself. It's just a very expensive mistake. And myth number 3, tax planning is only for the super rich. Absolutely not. The reality is that completely legal deductions and tax-saving options exist for everyone at pretty much every single income level. It's not locked behind wealth at all, and empowering you with those exact tools is a huge part of what this explainer series is dedicated to. So, the crucial point is really locking in this foundational mental model. Let's recap. Income tax is just an annual percentage of your earnings that funds shared public infrastructure. Progressive systems simply tax different portions of your money at different rates. Hitting a higher bracket never taxes all your income at that top rate. And because of that, your effective rate is almost always way lower than your marginal rate. But before we wrap up, I want to leave you with one final kind of provocative thought. What if there were completely legal ways to just reduce the amount of income that actually gets exposed to that tax in the first place? Well, those are called deductions, and that is exactly what we are going to dive into in our next explainer. If you found this structured approach helpful and feel a bit more confident, hit that like button, make sure to subscribe, and drop any follow-up questions you have down below. See you in the next one.